All right, let's keep talking some stocks and do some trading and check out the week ahead of us with Alan Nuttman. He's the Chief Market Strategist at BullseyeOption.com. In studio, a special appearance.
Yeah, I'm only 2 blocks away, so, all you got to do is pick up the bat phone. I could be here at any time. I don't know if you want that, but Merry New Year, all right?
Likewise. And we got a big week, Alan, all right? That's why we brought you in.
Yes.
There's a lot to talk about.
There's a lot to talk about. There's a lot to talk about. The season of pleasing is almost over. Traders are starting to get ready for the holidays, but this week is important. Now,
how do we not spoil the Santa Claus rally that's already here?
Exactly. Well, yeah, Santa Claus rally, you should have unwrapped some of your presents already and cashed in some of those. In my opinion, that's what I've been doing here. I'm a bull market genius. And
you've had a lot of good trades, especially buying stuff that was the laggard group category. My question is, the month of November was great for that, basically. I imagine a lot of your trades hit last month.
Yes.
Because it was when the market went from the big cap mega stuff, which you're kind of leaving aside, to the rotation trade.
Right, exactly. So it's risk reward is looking for the laggards to play catch up, and that's it. It's just simple math. But all I do is try and make it very easy. I don't work that hard. I try and make it very easy by buying in the money options, and all I need them to do is go a little bit further in the money. And I try and buy plenty of time for that to happen. So that's the way I attack the markets and try and be a victor, not a victim.
So what do you do now when we had that big rotation?
It's harder.
It kind of stopped out. Like if I symbolize that rotation with the Russell, it's now, we've kind of gone sideways for like a week.
Right. So we've got to be more selective. Now I'm going to blow your mind a little bit here. S&P 6,000.
Okay.
All right. So if you just take the distance of the drop from 4,800 down to that low in the S&P in October last year, you add that on that 4,800 high, S&P 6,000, and that's happened every time in history. So if we have a full V recovery, that's the technical target.
Oh, that's the target. Oh, I thought you were giving me like an index I hadn't heard of.
No. I'm giving you S&P
with the Russell 3000. I didn't know the S&P
6,000 because 5,000. We threw that out there months and months ago, and now people have stolen my thunder on that.
You don't want to wait until the new all-time high to.
Well, I forecast that if we can make new all-time highs, then the technical target is S&P 6,000. But I was going to bring a pillow for you today as a prop because I know you need a little bit of something here. Because I
took my nap in the control room.
No. Because we couldn't have had a better soft landing than unless you had a pillow at your desk.
Right,
how could you not? The markets have had it right. All right, the markets have had it right.
What about a whole bevy of cuts priced in? Does the Fed have to answer to that this week in your mind? Is there potential here for this euphoric trend to get a little Powell pushback?
He's going to talk tough. That's his job. It's tough love. He wants to talk tough and then, act accordingly. But he's been 1,000% right. Gotten exactly what we wanted. This is Goldilocks.
Sure.
This is completely Goldilocks. If you look at rates, there's 0% chance of a cut tomorrow. I'm not saying zero. There's always, who knows?
It's zero.
But there's only a 4%. There's 4% chance of a cut in January and 40% chance by March.
Last week with payrolls on Friday, we saw about a 25 percentage point swing, maybe even more in the March cut odds because we were at like 60 and it dropped 65 or something and dropped to like 40. When we're swinging Fed funds for a contract 3.5-ish months away, does that not portend some market volatility?
You just talk, things get overdone. And it gets overdone in Treasuries all the time. That drop from 5% down to 4% in the 10-year note yield was, a little overdone. It needed to back up a little bit. And that's all
if it does back up, do you think it gets in the way of stocks?
I don't think so.
Okay, let's
now. I'm a lot older than you, and I'm going to tell you this again.
Thankfully,
rates. They're projecting 4% rates in 2024 at the end of 24. So rates at 5% are nothing historically. Nothing. We got spoiled. We got extremely spoiled with rates at zero. That's a historical anomaly. That shouldn't happen.
So, and you have not been a big believer that higher rates necessarily has to be bad for stocks, but the market still is kind of traded that way.
Higher? Well, yeah, we had an exponential acceleration of rates, but they still never got high. We've been here for longer, but at 5%, 5.25%, that's not high. Yeah. We're not at 8. We're not at 10. We're not at 14, we're not at 18, okay?
Fair enough.
It's relative.
I like the way Alan says he doesn't talk macro, he doesn't think that much, but then we got it out of him.
But I trade what I see. I trade what I see, and what I see is backed up by facts.
All right, you're looking at Alibaba right now. There's nothing bullish in the facts here. This thing's getting ripped apart. How come?
Risk reward.
Well, why are you going to China to find trades here, Alan?
China is down 20%, whereas the S&P's up 20%. Okay? How much more bad news has China had? And like I said, like you said, I think it got overdone to the downside. And the way that I measure that is very simply. You measure the implied volatility. That's the emotion of the stock. The stock continues to make new lows, but not new highs in implied volatility. Not even near the highs in implied volatility. So that's telling me there's a sentiment shift, that the sellers are running out of strength. They don't have that juice anymore. Okay. The volatility is cut in half as well as the price. And the PE on this is 9. So I don't think Alibaba's, I think they are still figuring out how to make money. I think
it's worth more than that.
So they know how to make money, and it's about risk reward. And I love this bottom pattern. It's been between 70 and 90 for 3 months here. So 80 is a midpoint level. If we get to the 80, then it's probably going to pop to the top of that range. Now there's a gap at 80 and there's a gap at 90. And you know how this works. When these shorts have to cover, it can make a nice healthy move to the upside. And I'm not asking for a lot. I'm not asking for this to come all the way back. Again, this is 40% off its January peak. So just a small 5 or 10% move produces big gains in options.
We're just below 71 bucks. What's the contract again? Remind me.
I'm looking at a 65 call for March.
Oh, okay.
It's about 8. What are we looking at here? So some in the money here. It's trading about 8. It's $6 in the money. It's got a 70 delta. And if we get up to that, to that 80 level, it's in money 15, so that it's almost doubles.
You had a lot of nice U.S. bullish trades that caught the rotation. I don't know. I feel like you might be overstepping.
No. We're very limited in stocks that haven't taken off in the United States. It's hard from risk reward. Right. So I've got to look elsewhere based on my sentiment shift and based on the risk reward. But I like Zoom. I just don't like the options as we stand right now because it's in between strikes.
Zoom the stock?
Zoom the stock. That's making a nice bottom formation. Okay. And AI is set up technically. It's got a lot.
C3?
Well, whatever the one AI is, I don't follow this technology. I trade a chart. I trade with the chart.
C3 AI.
I trade the chart, and the chart is telling me that we're getting money flow into that stock again, and it's been trading in this range here, making a nice support point. So it's about risk reward, and it's hard because we've cashed in so many American stocks.
Okay, so you're extending the love to China, but a couple U.S. teasers in there with Zoom and AI you're watching as well. Okay. Thank you, Alan Nuttman.
Thank you.
Pleasure to see you again in person. As always, Alan Nuttman, Chief Market Strategist at BullseyeOption.com. All right, when we come back, we'll talk a little bit more about the outside world, emerging markets, including some